What's up, traders? Welcome to another video. Steven here, your honest trading coach, and it's been quite some time since I have not got a question at least once a day about buy stop or sell stop orders. And for that reason, I decided to dedicate today's video completely to that type of order. Buy stop and sell stop orders can increase the accuracy of a trading strategy. They can help with your timing in the markets and provide a much better risk to reward ratio if used correctly. So in today's video, what I'm going to do is walk you through what these types of orders are. Then we're going to talk about how to place these types of orders on a trading platform. And finally, after that, I'm going to talk to you about some practical ways you can use buy stop and sell stop orders to start improving your trades. So if that sounds good to you, and if that's something you're interested in, go ahead and click that subscribe button down below the video. We do videos like this each and every week. Click the like button for me to help out with the YouTube algorithm, and follow us over on Instagram at The Trading Channel, and I will be right back to talk to you all about buy stop and sell stop orders. See you soon. Welcome back, traders, and firstly I'm going to apologize for the bad audio quality. I'm actually on vacation and I forgot my mic back at home, so that's why if my voice sounds a little muffled, that's going to be the reason. But let's go ahead and move on with the video, starting with what is a buy stop and a sell stop order. Well, a buy stop order is an order that is executed at a specific price that is above the current price of a financial instrument, and a sell stop order is directly the opposite. A sell stop order is an order that is executed at a specific price that is below the current price of a financial instrument. So looking at the chart on the screen right now, what that means is that if you wanted to place a buy stop order, then you would need that order to be above 1.1257. So your stop order would need to go above price. Anywhere above price is fine, as long as it is above price. For a sell stop order, we'll color that red. What it means is that you're entering the market. You are placing an order to enter the market at a specific price below where price currently is. So in this case, with a sell stop order, you would need to enter the trade at a price, or have an order at a price that was below 1.1256. Now, why would you want to do this? Just let's quickly go over the reason behind something like this. Well, if there was, let's say, a big daily level of structure right here at 1.1266, and you thought, okay, well, if this market, the euro dollar 1 hour chart, goes below this previous engulfing candle, I think that means this market's going to start heading way lower. Well, if that's the case, you may want to have a sell stop order right here. And because of that sell stop order being there, once the market pushes down and hits that, your broker will enter you into a trade at this sell stop order price, and you can have a designated stop loss and target set within that order as well. And we're going to go over all of that in just a second. I just want to be clear with you about what a buy stop and sell stop order is. To go over that one more time very briefly, a buy stop order is an order that is going to be above where current price is, and when the market gets to that order, your broker will enter you into a trade at that specific price. You can then set a designated stop loss and target. A sell stop order is directly the opposite, and it's what we just went over. So hopefully now you have a good idea of what these orders are. What we're going to talk about now is how we can actually use these orders on a trading platform. So let's do that now. I'm currently on TradingView, which is my trading platform of choice. Your broker or platform may be slightly different, but for the most part, most trading platforms will have three types of orders you can use. If you look right here, you see market, limit, and stop. Stop is what we're going to be talking about today. The stop order, all you have to do is click the stop order and then figure out if it's going to be a buy or a sell. Do you want to be buying when the market starts to head higher? We'll talk about how to use these in just a second, but do you want to be buying if the market breaks through a specific price, or do you want to be selling if the market goes below a specific price? With that being the case, you would either click a buy stop or sell stop. Let's say we want to buy the market if we break above these most recent highs right here at 1.1277. If that was the case, and we wanted to buy the market at 1.1277, and one of the benefits of this is, let's say you didn't have the time to just sit right in front of your computer, but you knew you wanted to buy if the market got above 1.1277 throughout the day. Let's say you had something else, another obligation that you had to go do. Well, what you would do is set your buy price, your buy stop price at 1.1277. And I like to use this type of order for breakout trades, and we're going to discuss that in just a second. I'm going to go through some practical ways you can use these orders to help improve your accuracy, give you a better risk reward ratio, and to time the markets even better than you can with a market order in just a few minutes. But this would be the order set up as is right now. You would put the amount of units you want. Let's say you did a standard lot. You would put the amount of units that you want to purchase at that specific price. And what that means is that if the market, again, you're saying if the market breaks out of this high, I expect it to go higher, the high of this green candle right here. If the market breaks out of that high, I expect that we're going to go a lot higher. This is not a strategy. Again, I'm just giving you examples to show you how to use a buy stop order. If that was the case, this is the way that would be set up. I want to buy 100,000 units of the euro dollar at 1.1277. So if the market gets there, that's exactly what your broker will do if you click buy. If you actually execute this order, that's what would happen. Now, your broker and platform will more than likely have this as well. You'll have an opportunity to place your stop and your target. So let's say you wanted a stop loss below the previous candle lows right here, and you wanted a target of a 2-to-1. We can make that happen really quickly here. And I'll go ahead and show you this order. I'll delete it right afterwards because this is not a trade I actually want to place, but I'll show you actually placing the order right now. So we have our entry. We want to enter the market at 1.1277. We have our stop loss price below the lows of those candles. So that would be right there. And let's say we want a 1.5-to-1 risk reward. There is a 1.5 right there. So now we can actually put in our stop loss price and our take profit price. So for the stop loss price, we can actually use pips to make this very easy. It would be 32 pips stop. And for our target, we have about 49 pips. And all that's left to do now is click buy. And at that point, you have an order placed. And if the euro dollar heads up and hits that order, you will be entered into the trade. Your stop loss is already set, your target's already set. So you are good to go in terms of this specific trade. Now let's take a look at the opposite example of a sell stop order before moving on to some practical ways you can use this type of order for breakout trades and more accurate entries. Okay, so for a sell stop order, let's say you wanted to enter if the market went below 1.1248. And you wanted a stop loss above the highs over here, and you wanted to put your target down here at this previous support level. Again, this is not a strategy of any kind. I'm just giving you this as an example of how to use a sell stop order. What you would do is you would go ahead and get to however you place a trade in your trading platform. For me, it's just right-clicking on the chart here on TradingView, going to create a new order. Remember, this time we want to do a sell order, and it's a sell stop order. With that being the case, we want the order to be at 1.1248. So 1.1248. And let's do the same standard lot, and we can now set a take profit and a stop loss. Let's say you want your stop loss above these highs. We talked about the target being down here at these previous lows. With that being the case, this order would have a stop loss of around 1.1280, and that's perfect where it's at. And we would have a take profit at 1.1202. 1.1202. And clicking the sell button right now would set you up with about 1.5-to-1 risk reward. We can see our 1.4 right here, and this is one of the reasons I love TradingView as a platform. It gives you your risk on the trade. I'm risking 0.24% of the account right now, and it gives you your risk reward right here in the middle. So in this case, you would just click if you wanted to sell this and you wanted to place this actual order, and there you go. Just like that, your order's placed and you're good to go on this specific trade. So now that we've went over how to actually place these types of orders in a trading platform, what I want to do now is show you some practical applications, one of them being using this to get better accuracy on entry reasons, and the second way showing you how to actually use this in order to trade breakouts in a very specific strategy and a specific way of using buy stop and sell stop orders to get a really highly accurate opportunity out of trending markets. All right, so for the next part of the video, I'm going to teach you a little strategy that's extremely simple, and then I'm going to show you how you can use buy stop and sell stop orders to increase the accuracy of almost any strategy and almost any entry reason. Let me go over briefly the strategy I'm going to teach you right now. What I'm looking for essentially are candles that look like the one you see on your screen. And this candle is just a candle in which the body of the candle closes and opens, or the entire body of the candle is within the top third of the entire candle from the low to the high. So the way I point these out is I pull a Fibonacci retracement from the low of the candle to the high of the candle, and I have a Fibonacci retracement level at 33.3%, giving me the top third of the entire candle from low to high. So with this being the case, what I'm going to be looking for is these candles. I call it a 33.3 candle. And I'll be looking for these above the 20 period EMA. Right now, this blue line you see on the screen is the 20 period EMA. That is an extremely simple version of this strategy. Feel free to take it and use it as you will. Don't use it right now. Take it, test it, build a trading plan around it, do all the necessary steps. But this is something that you are free to go test for yourself. And this is what we're going to be using for this example. So let's go ahead and take a look here. We have our 33.3% candle that you just learned. And what we're going to be doing is looking for one of those candles above the blue line, which is our 20 EMA. All right, that looks like one right there. Let's go ahead and check. We have our Fibonacci retracement tool. Remember, we're pulling from the low of that candle to the high of that candle. Are we above our black line, which is 33.3% of the entire candle? The entire body of this green candle is in fact in the top third of the entire candle. So that means if I was trading this specific strategy, I would have an entry here at the close of the candle. I would just place a market order, right? A stop loss below the wick of that candle, below the low, so somewhere like that, and a target, let's just say for example's sake, at a 2-to-1 risk reward, which would look something like this. Now, with this being the case, and this is where I'm going to teach you how to improve the accuracy of an entry reason and the accuracy of a strategy using these buy stop and sell stop orders. If this was the case, let's see what would have happened to this trade. We would have pushed down, down, and then eventually stopped us out. Now, what I'm going to do is back the chart up one more time. At this point, let's say we're looking for the same entry reason, but instead of placing an order as soon as that entry reason happens, instead of placing a market order, let's say we want to place a buy stop order above price for confirmation. We want to place a buy stop order above that entry candle and use that as extra confirmation. So as we're pushing forward, we get our entry candle, right? But we don't just place a market order at the close of that candle. What are we going to do? We're going to place a buy stop order 3 pips above the high of the entry candle. We're using this as extra confirmation to give us more accuracy on this trading strategy and on this entry reason. So if the high of this candle is 1.1037, we would go 1.1040. And that will now be our entry. It's a little bit higher than that, 405. So now let's see what happens on this trade. We push up, we don't quite close above or get above our entry price. So at this point, we haven't even been entered into the trade. We continue, and because we've already hit our stop now, we wouldn't keep this order. We would delete the order, and this being the case, we would have missed a losing trade, or we would have avoided losing money on this specific trade, and the only thing we did differently was placed a buy stop order above our entry trigger. Now, you'll hardly ever, it will happen from time to time, but you'll hardly ever lose a trade because of doing this, because if the market's going to take off, it normally takes off and will hit your stop order at that 3 pips above your entry candle, whereas if the market's going to push down like it just did, you avoid that losing trade by having that buy stop order above price. Let's take a look at one more example so I can show you a little more about that. So right here, we have another candle that looks to be, it's above the 20 EMA. So let's go back to our strategy. We have our blue line, this is 20 EMA. This is the candle I'm talking about. The color of the candle does not matter. We just need to make sure that this candle, the entire body of it, is above the top third of the candle. So if we pull a Fibonacci retracement, we have the entire body above 33.3% of this whole candle. So with that being the case, this would be an entry, right? Well, even if we used our 3 pips above as an entry and our stop loss and our 2-to-1 target, we would have won this trade. So it really doesn't get you out of very many winning trades. Again, it will happen from time to time. But what it does do is help you to avoid losing trades, therefore increasing your accuracy on almost any trading strategy and almost any entry reason that you use. The same thing would apply to any candlestick pattern that you used for entry. If you used an engulfing candle, using the buy stop order above it or sell stop order below it would help you to increase accuracy of that entry reason depending on your trading strategy. So that's one way to increase accuracy using the buy stop and sell stop orders. The sell stop would just be the opposite. You'd be looking for entry reason to go short, and you would be putting your sell stop below, let's say this is your entry reason, you'd be putting a sell stop below that same stop and same target. So that's a little bit about how to increase accuracy. Now what I want to do is show you how to capture really accurate moves if the market's trending using these buy stop and sell stop trades. So let's take a look at that. So let's go take a look at that right now. All right, so now what I want to show you is an advanced way of using buy stop and sell stop orders in order to trade breakouts with really high momentum to get a really good risk to reward ratio on a trade. So a very important note here is that you want to have some type of catalyst before looking for an entry like this. For me, a catalyst is either something news-based that I know is going to push that market around pretty well, or a major level of structure. Here on the euro dollar, we have a major level of daily structure pointed out in red. So what I would want to see as a catalyst is this market get to that level and be pushed down immediately from it. And what I define being pushed down immediately from it as is if this market hits that level and then crosses below that 20 EMA we were just looking at. The blue line on the screen is still the 20 EMA. So we've come up into our level. We're now pushing down. If we get a cross below the 20 EMA, at this point, I'm going to start looking for possible breakout trades. And the reason is that we've had a catalyst, the catalyst being the catalyst for me thinking that this market's going to keep going lower being this heavy daily level of structure resistance. So that being the case, we've pushed down, and what I'm going to start looking for is this first swing low after this push down that crosses below our 20 EMA. When I get that swing low, I'm going to put a sell stop order right below it, expecting this market to break out and push down because of that daily catalyst, and because if we do this, if we do break below this swing low, then we're starting to make new lows. And lower lows and lower highs are what it takes to start a downtrend. So essentially, what I'm doing is try to capture the first move on a downtrend that hopefully will last much longer and give me a really good risk to reward ratio. So let's go ahead and take a look at what the market does. As we continue to push down here, we'll start looking for that first swing low. And there we go. That I would consider the first swing low here on the euro dollar. With that being the case, and the swing low I'm talking about is right here, I would have a sell stop order. Let's color it red since it's a sell stop order, and I would have that order a few pips below that swing low. And what I'm going to be telling my broker is that if the market comes to this level, if we cross below this level, what this sell stop order is going to do is enter me into the market at around 1.0920. After it does, I'm going to set my stop loss and target accordingly. But let's just go ahead and take a look at what the market continues to do. We're pushing down, lower, lower, still haven't hit our order, and there we have now hit our order. So we would have been entered into this trade. And once entered into this trade, what I like to do on these breakout trades in order to give myself a really good risk to reward is put a stop loss just above my entry candle. So this stop loss is actually set at a really nice place as is. So I'll leave that at around 20 pips for the stop. And for a target, I would like to get targets off somewhere around the previous support level of the previous uptrend before hitting that daily level and pushing down. So with this being the case, it sets me up with a 3-to-1 risk reward ratio. And let's just hit the play button here and see how this trade would have played out. As you can see, we're pushing down. And like I said earlier, essentially we're trying to capture a move down in the beginnings of a downtrend that can hit a really nice risk reward. And as you can see here, that has done so. And for this type of trade, it would be exactly the opposite for a buy trade. What we would be looking for a buy stop is the market to hit, let's say, a daily level of major structure, push up, cross above our 20 EMA. We'd be looking for that first swing high, put a buy stop order above that first swing high, and we'd be looking to capture the beginnings of an uptrend to get a really good risk to reward ratio on that trade. So that's a look at an advanced way of using this to trade breakouts. Something really important to remember about this, and if you're a beginner, you probably don't need to be trying this quite yet, but if you're someone more advanced in your trading career, then something to remember is that you want to have that catalyst. There must be a news event, there must be this market coming off a major level of structure, breaking below or above the 20 EMA before looking for trades like this. Otherwise, this type of strategy will eat you alive and probably cause you to lose money. And of course, as with all of my videos here at the trading channel, do not take this and start trading it right now. You want to go test this for yourself and see if it actually provides an edge over the market. Not only that, you want to back test it, create a trading plan around it, and actually do the proper work before risking real money. And if you enjoyed today's content, we do have the EAP Training Program, which is a more advanced training that we offer. In that program, there will be a full training course that teaches you all the strategies that I use day to day in my own personal trading. And you will also receive 3 to 5 email analysis per week, which are trades I'm in based on the strategies that you learn. Along with that, you will have priority email meeting that you can message me at any point asking questions about the course or Forex trading in general, and I'll get back to you as soon as possible with a very helpful answer. So if that sounds like something you're interested in, it will be the top link in the description. If not, that's totally fine too. Just make sure you are subscribed here to the trading channel, because we come out with videos like this each and every week. Go follow us over on Instagram at the trading channel, and I will see you in the next video. Talk soon.